You're a man who understands what it's like to run businesses, to have to slim down businesses, to see a restructuring. What do you make of not only Disney now saying that they're going to be cutting their jobs, freezing hiring, only essential travel? We heard from Metaverse, the artist formerly known as Facebook, but Meta, 11,000 jobs to go. These are significant cuts.
There are a lot of other companies, Stripe, Lyft. There's so many of these companies are using this moment. But if you look at the numbers, in a lot of ways, they overshot. Mm-hmm. They expected that the growth that they experienced during the pandemic would be sustained. So if you look at what's happened with Meta in 2017 had 25,000 employees. 2019, they had 50,000. After the cuts, after the 11,000 cuts, they're still going to be at 75,000 employees. So this is just going back to yesterday a little bit. And it's also a moment in which they need to say to their investors, we're going to focus on profitability and recognize the realities of the web.
I think what's interesting is also the manner in which these are being announced. To his credit, Mark Zuckerberg had a mea culpa moment. He said it was his personal responsibility. You've seen that echoed by other leaders as well, and whether or not it's more previously, Shopify was almost the first company to really announce that really they'd got the trajectory wrong. They'd got the COVID lift and they thought they could bring it into perpetuity, and actually no, the arc was going to fall back down a little bit. Then on the other side, you have an Elon Musk who is doing it without much emotion. How do you as a business leader, as a management consultant, think about the way in which these messages are delivered?
Well, overall in the tech business, we're losing about 100,000 jobs from those companies. But also, if you look at it from the perspective of the overall market, all those people are going to find other jobs. There's a tremendous amount of demand for technology talent in everything from finance to government to healthcare. And even in startups, there's about $250 billion in venture capital out there waiting to be deployed. But when you look at these companies and you think about where their cuts are going to come from and what they need to do, the bigger issue is they've got to find new sources of growth. Mm-hmm. In every one of these cases, from Apple to Amazon to Meta, they're all dependent on the old sources of growth. And by the way, that's why they're coming to our company Activate, because they're looking for new places for growth. Cost has a huge human toll, but it's actually much more difficult than growth.
Okay, so let's talk about the growth that hopefully some of these people who are now getting, we hope, decent severance packages and able to go and set up their own startups, or indeed a Meta that now doubling down on the continued trajectory of a different kind of growth, a focus on a Web3, let's call it. You're, of course, the man who puts together the future analysis. You're putting together what 2023 is going to look like for us. Is Meta the right bet?
The challenge is Meta's Metaverse bet is all about virtual reality. And what's happened overall with Metaverse is we're already past the hype cycle. I mean, we've already hit the peak of hype, and now we are going to see sustained investment. But the sustained investment may not be in the places that Meta is focused. So, for example, the Metaverse doesn't necessarily mean virtual reality, not necessarily a virtual reality headset. In fact, our research shows that most people don't spend more than 30 minutes at any one time in virtual reality. Mm-hmm. So a lot of it's going to be 2D, and a lot of it's going to start in video games. And in fact, when you look at the Metaverse, you have between 4 video games, between Roblox, Fortnite, Minecraft, you end up having 300 million people who are spending a great deal of their lives, on average 11 hours a month, and some of them are spending 40 hours a week in these games. And they're all Metaverse platforms. So the idea that this is way off in the future, and none of it is spending time with an Oculus headset. So it depends. Every company is going to take a different bet. It just may not necessarily be the right bet.
What you mentioned Roblox, and what Roblox sort of for many helped with this whole idea of a metaverse. We could then see, that's maybe where crypto comes in. That's maybe where the payment, when you're buying skins and the like, suddenly you have a native currency, you have a digital currency, for want of a better expression. When we're starting to see the fallout that we've just done with FTX, or crypto in general, is that going to impact the metaverse, Web3, the direction of travel in any way?
Well, actually, the payments that are taking place inside of those large metaverse platforms, they're not crypto. And when people look at Metaverse, they think Web3 and Metaverse are the same thing. In a lot of ways, they're not. Web3 depends on really decentralized protocols, crypto. A metaverse is really the consumer layer. So in the same way that we saw the browser was necessary for the internet, metaverse is going to be necessary for Web3. But we're way far off in seeing the applications of these technologies in Web3.
Okay.
And what's happened even today with FTX shows that that the tools may be valuable, but their application is going to take a while to be applied.
So therefore, when hiring, if ever, I mean, at the moment, is the workforce in the right space? And these big companies that are coming to you for ideas for growth, have they got the right resource and the right talent? Are they letting go of the wrong people, for example?
Well, there's an old saying that the technology company with the best technologists wins. And they're keeping the people that they need, the people with unique skills. But a number of those people with those skills, whether it's AI or it's creating unique environments, those people are going to go to other places. And we're going to see, just like we've seen in different waves of technology, they'll go other places and they'll start new businesses.
Yeah.
And so one of the keys for each of these companies is going to be able to figure out where they're going to experience growth, where the growth opportunities are going to be, and then aligning the people that they have around those areas. And also quickly moving out of areas where they don't see growth in the future.